What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ENPH for Enphase Energy. On the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Now, before I go any further, I always like to disclose if I have a position in the stock or not. If I don't say anything, which is a majority of my videos, then I don't. But in this particular instance, I do have a long position inside of Enphase from an undisclosed location, basically is what I'll say, and it is in a long-term account. So take that for what it is. You can say I'm biased or not, but regardless, you're here for a technical analysis. So let's get into the levels. Of course, my chart is already going to be mapped out for us. We have those daily levels in place. Note that we were trading in this consolidation range for quite some time, and earnings took us up and out of this range into the prior all-time high. What I would firstly point out about ranges, right? Whenever we're talking about ranges, and I would actually adjust that maybe to say that this was the range, this was a look below and fail, and now we're outside of the range. But whenever we're dealing with ranges, I've said that word so many times now, we basically look for a doubling of the range to be the upside target. And I would say that Enphase has essentially done that coming into the high here up and around 225-ish, we'll call it for round number 6. So from that perspective, the upside has been kind of fulfilled, but it was all due to a large earnings gap up. So is there more upside? Maybe, but is there also risk for some downside? Absolutely. Coming into the all-time highs, essentially, this known area of resistance, and we already start to see an upper wick print, there could be a little bit of rollover. And again, we're going to talk more detail as we get into the 30-minute right now. So all things considered, the gap underneath us is what we have to contend with. The low of today is at 204.33. If that breaks down, I'm not saying it fills all in one day, but technically the risk is that the gap fills underneath us down to $183.34. So please be aware of today's low at 204.33. The other thing I would do is take out the Fibonacci's and look at the expansion of range through that lens. Were the pullbacks healthy? Where was the activity here essentially respectful? So if we come in from the low and up to the high of the first move, what you'll notice is that we did violate the 38.2, violated the 50, but we held on to that line in the sand at 61.8. So to me, not the best show of strength from the bulls, but remember that we are opening on a massive gap up. Generally, you give them a little bit of leniency, okay? So the fact that it did hold is still something. Obviously, it went on for a secondary run here. So let's take the fibs out this time from the low of the day up to the high of the day and see where we landed with this afternoon pullback. So for right now, we certainly did close underneath the 38.2, but it was in the last 30-minute bar of the day, so we don't know if it will recapture it immediately on that next 30-minute bar. That's usually the rule of thumb. If it can recapture the 38.2 on the next 30-minute bar, you don't pay too much attention to the close underneath for there. But for now, again, we just don't simply know that information. We'll see what unfolds when tomorrow's bell actually rings. But what I think is really important about this 38.2 is notice that it's exactly the high of day on that first little push there. So for me, I do want to know where this area is, and now we'll talk about scenarios. We also want to know, of course, where these lows are from our first 61.8. There we go. So in terms of scenarios, if we open inside of this range in here, that's going to be like the most neutral scenario here. You're not going to be aggressively bullish, and you're also not going to be aggressively bearish. This here is a neutral scenario. If we recapture that 38.2, also this high, we know that the highs are in play up here, closer to 225, we'll call it for round number's sake. To the downside, if this breaks here underneath 209.50, we'll call it, the low of day is in place, and that's where we know the risk really lies, because if that breaks, obviously, there's a lot of gap to fill underneath. I would look at 200 psychological, then 195 from this prior shelf. Then after that, sure, the full gap filled down to 183.34. Those are kind of the scenarios I'm watching out for here. I'm not going to exactly tell you what I'll do personally with my position, but I will be actively managing it now that I have some solid profits on the table from this earnings gap up. I'm going to leave it off at that. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.